Hey, I got something to say. I'm just so sick of hearing everyone complain. I know it's tough and I know there's pain, but hitting bottom is the only way to change. So I'll keep hustling, you keep struggling.
There we go, there's that head pop. I love it. I love it. Welcome to CryptoEMC, everybody. My name is Rudo, known as the chart artist. With me is my trade buddy, Fibonacci Lee. And down at the bottom, we've got our honored guest, Gareth Soloway. How are you doing, Gareth?
I'm doing really, really well. Thank you guys so much for having me on.
All the pleasure is ours, Gareth. Thank you for having time for us.
So we were chatting
Rudo is so
backstage.
excited. He's bouncing on his bouncing ball.
I like it.
I'm bouncing on my ball. Gareth's got a really epic chair there, and I hear a lot of people been saying that that's an epic chair that he's got. I'm chairless. I've only got a yoga ball. So I kind of went the other way. So
Nice.
Let's see how our chair plays out today.
You're doing the healthier way.
So guys, so we were chatting backstage a little bit of Gareth and about how we came about trading, and it's real interesting. And one thing that we definitely picked up that is uniform is the discipline that is required to be a trader. And so with that being said, I think, Gareth, just quickly for the audience, just explain to them how long it took you to become profitable, your journey and the struggles, just to give them a little bit of a background that it's not just as easy as just signing up today and being profitable tomorrow.
Yeah, and that's such a good point to make to newer investors, is that, you know, you just can't come in and start making money. And listen, in some markets you can, but that's almost like a false positive, because the market has a tendency to give you things like money and rewards, and then it takes it away very, very suddenly. And if you don't have the discipline to kind of monitor yourself, manage your positions, you ultimately will get wiped out. And the market tends to take more than you end up making in the long run if you don't get educated. So I mean, you know, we were talking before we went live about my history, and, you know, I grew up in a household, we didn't have investments. We didn't, you know, both my parents were teachers. I got involved in high school with an investment club. First time I ever got involved in investing, and it was all fake money, but it happened to come during that late period in the 90s when the dot-coms were doing exactly what cryptocurrencies did over the last couple of years. They were just multiplying, right? And so my fake account became, you know, from 100,000 to 200 to 300, and that was addicting, right? I mean, from a kid who got an allowance of maybe, you know, a couple dollars every month to making, even though it was fake, 100, 200,000 in a month, it was something where I said, I have to do this, right? I have to figure it out. And I didn't know how, right? So I went to the university and I ended up majoring in economics. I thought that's a good place to get in my foot in the door somewhere. I went to work for MetLife afterwards in the wealth management area, but I was low man on the totem pole. I was cold calling. I was, you know, I really wasn't doing any investments, right? And in a lot of these firms, they just tell you what to tell the clients, like push this investment, push that investment. That's what our team is saying to do. And so there was nothing about it that was unique or that let me kind of trade. And so after a year, I quit. I had $10,000 saved at that point. I put it in an account. I got leverage, 5-to-1 leverage from a firm. And at this point I was trading stocks. I mean, this was cryptocurrency, pre-Bitcoin. And I just started to try to trade. I didn't really have a lot of guidance. The internet was still in the early stages. You didn't have a lot of people teaching out there. So I had to learn my lessons the hard way. And by hard way, I mean, you know, I would make money on a couple trades and then I could get wiped out on a trade. And I just didn't cut the loss. And I would lose, you know, 60% of my account. And I decided that I wasn't going to quit. I was going to learn. I worked 3 different jobs while I was doing this so that I could kind of replenish my trading account. I spent as little money as I could. I think I lived out of my buddy's basement for a while. And it was just like, you know, constantly replenishing, learning, losing, learning, losing. And then finally, after years, I mean, it probably took me, you know, from the very first time I ever did a trade, at least probably 5 years before I became consistently profitable. And consistently profitable didn't mean that I all of a sudden was making millions of dollars. It would be, I made 10,000 this month, maybe another 10,000 the next month, and then I lost 15,000 the next month. And I had to learn another lesson or rule. So the point is, the market is always right. You know, that's number one. Whatever it's doing, it's no one's fault but your own. You're making decisions. The market's going to do what it's going to do. You have to understand that. You have to have a plan going in, and you have to learn how to, in my opinion, read the charts and read what's going on.
It's very important that you have a good feel. And what I like about it is that you, in one of your previous videos that I watched, that you take into account when you're trading the general market sentiment and that emotion that runs. Because we all know, we say this over here, if you start sipping the euphoria juice, that's when people forget to take profit. And that's that turning point when the market really punishes you. So to get into where we are at this moment, what would be the predominant feeling that you can assign to what the market is currently going through, the crypto market and probably the stock market as well? They're kind of in the same boat.
Yeah, so I look at it like it's the beginning stages of a bear market, right? And we don't want to hear that. We don't want it to happen, but it's inevitable, right? The market goes through cycles. It's a natural process of the market, just like the seasons in a year, right? Spring, summer, winter, fall. The market will go through cycles. So you want to recognize it as soon as possible. Cycles usually top on euphoria. So if you go back to November and October in Bitcoin, you saw an insatiable appetite of average investors. I'm on Twitter. Whenever I would post anything bearish about Bitcoin, maybe topping out at 69,000, the amount of comments against me and the kind of the insanity was almost a confirming signal that I was probably right, right? And then
I
if you
remember
look at
you
past,
shorted the top.
yeah,
It
yeah,
was
I did.
impressive. What everyone was calling, 100K, and then you come out with a tweet. I'm putting a quarter of my position short Bitcoin here.
Yeah, that's true.
And that
Yeah,
was
I
the signal
did.
for me. My confirmation. I was like, okay, I'm following you, Gareth. I'm following you
Nice.
soon.
Nice. Yeah. So, I mean, and these are the things, right? Emotion is what is most prevalent in human nature, right? So if you have 1,000 people and they're trading Bitcoin, to just use an example, the emotion is going to dictate, believe it or not, the price action. And the reason why it dictates is because if everyone's bullish, it means all 1,000 people are long, which means there's no one left to buy. So you eventually run out of buyers, which means all it takes is one or two sellers, and then the dominoes start to fall, right? So you have to really watch that emotion. In fact, it's probably the most underrated thing in investing that people need to pay attention to. Obviously, learning the charts is important, but emotion can be a definite signal for when tops and bottoms are in.
I always say it's similar to people in the gym skipping leg day. You see them, they've got these big upper bodies and then they're walking on toothpicks. And that's what most traders do suffer from. It's fun to learn TA. It's fun to learn, a new trade strategy. And it's fun to play with all the buttons and look at all the charts and all the indicators. But we tend to don't pay any attention to the fact that it's still your mind, this little finger over here that gets controlled somehow from here, that makes the ruling decision. And if you don't do anything with that, all the strategies in the world doesn't mean nothing. So that's really exciting. And so what we've done is we did a little bit of research, obviously, and I mean, bad news spread like wildfire through the crypto space. Like you said, when people are negative, when people talk sense and it's valid, there's normally negative connotation behind it from the general public. And you've got a scenario with Bitcoin, and you're looking at a 20K bearish scenario for Bitcoin. And I want to ask you if you maybe want to bring up your screen. And we can definitely look at that. Personally, from my analysis, my TA, I don't really see it happening just yet. Lee confirms it. But the thing is, TA is a risk management tool. In the end of the day, it's not whether you can probably see it, it's how you protect yourself on the journey. And so we are, I want to learn. Please show me what you've got, and let's have some fun there. So
Absolutely. So, and just before we get into it, one thing I think every person should kind of hear is that when you're investing, there's this natural want to be involved in these type of movements, right? The cryptocurrency movement, but you have to think about where you're buying, right? So remember, we all do our shopping, right? We might go to the grocery store and buy some apples. We might go to the mall or the super or some other place and buy a pair of jeans or a new shirt. And when we do that, inherently, what are we doing? We're looking for a deal. We're looking for something on sale. Like, I'm not going to go buy some apples when they're $20 for a single apple. I'm going to say, you know what? There was a cold frost here. That's why prices are high. I'm going to wait till apples come back to 50 cents an apple. But for some reason in investing, the hype builds and kind of takes control, and people are willing to chase and willing to pay up. And I always recommend have that mindset of asking yourself, is this a sale? Am I buying Bitcoin at a good value point versus after it's run 50 or 100%. And that'll give you a good indicator of if you're, chasing and if you should get in. And remember, there's always another trade, right? If Bitcoin, like for instance, people getting in at 65,000, you didn't have to do that. It always pulls back. Never chase. You'll get in a better spot.
It has always
I
been
like
a
to. This is where,
negotiation between the trader and the market.
Yeah. Yeah, it's human nature, right? We get caught up. I mean, especially I actually think that social media has probably helped inflate the crypto bubble and even the stock bubble to some extent, because you have these, I mean, think about it 20, 30 years ago before the internet, and you didn't have places to go where you would get this kind of nonstop barrage of bullish sentiment. I mean, yeah, maybe your buddy was talking about it, but that's one or two people in your small circle. With the internet now, it's everywhere. So it means that people are going to get overly greedy even more and follow the suit of buying at highs and really panicking at lows too.
That's true. We've got, I think, better marketing strategies out there than what the companies can actually produce and sustainably grow towards, and that creates that Ponzi investor mindset where if we all buy now, all of a sudden, how are we going to take profit on it? And if there's no more new money, when that marketing reaches that extreme point where everybody sitting around the campfire now has Dogecoin, all of a sudden, that's when it starts turning on it. Yeah, one thing I want to go back to is the sentiment regarding the apples, and I like to use this as well as an add-on where fundamentals does really sometimes make sense. And I've seen you've got a good grasp on the fundamental stuff. Although you call yourself a technical analysis, I have to say that looking at historical ways of how you've been looking at stuff. So I always say to people, when you look at BMW as an example, and there's a factory defect on a model, that share price goes down, and that's the type of thing that we look for as traders, as to try and exploit as well. And the idea, because we know that is not bad for BMW, or the director did something wrong, but the company in general is still going to fix the problem. They're still going to move past that problem, correct it, because they've got a legacy and a long-term goal in hand, and this is a little hiccup. And that's that Forrest Gump bumper sticker, shit happens, and that's our job, to try and get in on that. So, so.
And in fact, interestingly enough, that happened recently with Solana, where they had that outage, and it caused, price was already dropping because of the sell-off in crypto, but it kind of added an extra dip to it. And I actually utilized that to buy a little bit down there, and it's actually had a nice little bounce back so far. So I'm still in it, but certainly, those type of things where it's a one and done, if it was a constant problem, I think that's a bigger deal, but a one and done type situation, you definitely can take advantage of as a trader.
That's definitely true. So, okay, well, let's not keep the audience waiting, Gareth. I think they're itching to see your chart there, buddy. I'm going to bring it up, and let's have a look.
So first of all, let's talk about current price, right? So I love showing this chart because notice why. Look at how the chart of Bitcoin, this is the daily Bitcoin chart, went right up here, and then it's getting rejected. And again, there's a lot of sense for why that's happening. Number one, 20 moving average is right there. So that's a one. That's kind of a minor reason, because you've already chopped through the 20 moving average before. But this downsloping line, if you take the high of 69,000, the high here and the high here, that matches perfectly the high on Bitcoin yesterday, right? And we've seen the little sell-off today coming back in. So now what's going to happen is you're going to get this battle between this trend line down here, which marks this low, right? And this is a perfectly parallel line. And I think this, I hope I'm not throwing too much at you guys, but one of the things that fascinates me is this line and how this line is perfectly parallel. And that's where Bitcoin stopped to a T. And what that tells us is that this sell-off to the lowest point was exactly equal to the high here to the low here. And that's why the lines are actually parallel, because of that. So just a really cool reason as to why Bitcoin kind of stopped where it did at 33,000. But when I say a battle is brewing here, the reason the battle is brewing is because you have this downsloping trend line here, and that's going to continue to slope down. And then this one's coming across. And theoretically, probably by the end of February, these lines will meet somewhere over here, and price will be forced to choose, right? It's either going to break down or it's going to break out. one or the other. And that's just the nature of it. And whichever way you break out, you're going to get a significant move. Now, ultimately, short term, I'm favoring a breakout, believe it or not, even though down the line, I still think there's more downside to go. But I think, again, most likely you're going to pull back a little bit more, and then you probably shoot up to this level right here around 46,000 before you meet some major resistance.
Okay.
Well, that sounds like you're copying us. That's what we said earlier. But okay.
All it's saying is great minds think alike, guys.
That's it. Lee,
Why,
you got a question.
why 20K? Tell me how you come up with 20K. Certainly not with those trend line and this parallel channel, right?
Okay, so let's talk about that, right? So number one, you have to look back. So we're going to look back at different cycles. So we're going to go all the way back here, and we're going to go back to basically, I mean, I don't even know if my chart can go back this far, but here's 2013, right? So here was your high in 2013. It looks minute when compared to the run we saw in 2017. But after that cycle high, and you had this massive move up, you corrected about 80%. Right? It was an 80% cycle correction. The same thing happened in 2017, approximately 80% drop. So the idea here is, and this is just one of the points, right? You never want to just have one factor, but the idea is if you take 80% from 69,000, you actually get below 20,000. I think it's close to 10,000 as an ultimate low, right? So that's just one factor. Another factor that it has my radar and my attention is this head and shoulders pattern. So you had a head and shoulders pattern over here, which was one of my big calls from earlier in the year that got me a lot of notoriety, right? So shoulder, head, shoulder. What you do with a head and shoulder is you create the neckline by connecting the lows of essentially the armpit, right? So this low to this low. And what you learn from studying these things is that if you take the high of the head and shoulder and drop a plumb line right down to the neckline, that distance can be exactly replicated here to the low. And that's exactly what happened. So I had called for a 30,000 target here, and it once it broke, it went right to 30,000. And again, it's a measured move. So this distance is equal to this distance. So if we go over to this chart now, to me, I'm seeing another potential head and shoulders pattern, right? You have, here's a neckline right here. Okay. So shoulder, head, and shoulder. All right. And the idea is, again, if you take this high and drop a plumb line down, then what you have to do is once you break, the ultimate end of this is the same distance, which brings you just sub 20,000, I think around 17,000 to the downside. So, again, those are just some technical reasons. Another thing I would just want to throw out to you guys is that there's a lot of leverage in the system. I'm sure you guys have heard me talk about it before, but to me, cryptocurrencies are very similar to the dot-com bubble. And when the dot-com bubble burst, there was a massive sell-off. You had about 95% of them going out of business. Obviously, stocks like Amazon survived, and they've done amazingly well. But you had to have this kind of flush out of all the junk. Think about it as like someone who's sick, right? And your body is basically trying to kill off the junk in your system, but it wants to leave the good stuff. And so essentially you have these cycles with new technologies. Like think about Bitcoin, right? Cryptocurrencies, the blockchain, it's a brand new technology. It's going to change the world, right? We've all said that. We've all heard it. Well, guess what? In 1999 and 98, people said the same thing about the internet. The internet's going to change the world. It's a new technology. It's going to change everything we do. And they were right. But again, it created a bubble and then a massive collapse. And so to me, I just can't, I personally don't think that 33,000 is enough of a flush out, mainly because Dogecoin still exists. Shiba Inu still exists. I mean, there's still, 10,000 different cryptocurrencies. You have to wipe out that junk, and then the best will survive, whether it's Solana, whether it's Bitcoin, whether it's Ethereum, the best will ultimately survive. So you have to have that flush out moment, whether it's in the next year or two, I don't know. But ultimately, I think we've started it with this top.
Thank you, Gareth. But I agree with you. I'm saying that 30,000 shouldn't be the bottom. Mm-hmm. Even though short term, I truly believe that it should be the bottom. Retrace to 46, even a little bit higher, it is possible. And after that, even, that will even hurt the market a little bit harder. If we drop from over 50 or 50 something thousand to 20 or below 20, that will hurt the market on a bigger scale. Talking about tell me something about time, because now I've heard, a price pattern, and I have also done my own research, and you are, talking about this PPT, price pattern and time. You are bearish. In what time frame? And you're looking at reaching this 20K. Are we gonna have a all-time high in 2022 still, or not at all?
So,
and also, we all know technical analysis is just a management, risk management tool, right? At what price point you will invalidate this bearish analysis and then turn bullish?
Yeah. So, and you're right about that. I think it's important that everyone watching understands that technical analysis gives you an edge, meaning it gives you probabilities that you're right. But remember, you could have a 80% probability and still be wrong, right? Still a 20% chance that you're going to be incorrect. So you have to always understand that when you're doing it. And the idea is when you're trading off of charts, if you always have the probabilities at 70 or 80%, you might have to do 100 trades and you'll make money over 100 trades, but any single trade could be the one that doesn't work out in your favor. So like you said, it's very important for people to understand that. So the idea here is, I don't personally interpret or expect a new high in 2022, mainly because the past cycles don't agree with that, meaning that if you go back to 2017, it took at least a year for it to bottom out. And then even after it bottomed out, it took a long time for Bitcoin to kind of consolidate, start to move up, and then finally break back to the 2017 highs. I think it took almost 3+ years to get back to that point. So my guess is if you follow that same sort of path, you're looking at 2025 before it really breaks 65,000 and starts making its way towards 100, then maybe 250 and so forth. But again, Bitcoin to me is the future. It's digital gold. I don't think that the government will ever clamp down on it seriously other than good regulation. So I think there's a long-term future for it. But again, it's just the struggle that I have is just the froth in the system, the charting, those kind of things.
I really like your analysis, and I like the fundamentals you have behind it, and the fact that they need to get shaken out. And we need that max pain, not in the known sense everybody's saying regarding the future, but in general, people really need to believe that this is now over and turn away, because it's the only way that price can really go look for, auction theory basically states it beautifully. Price goes to where the money is. And if there's people in fear, there's promises to sell at a lower price, and price will literally go there. And once there is no longer people left that wants to get out, the only way that price can attract more money is to go up in value. And so what do we have there, buddy?
Sorry, Gareth, I only have one question answered. At what time will you turn bullish again? Because I do have a bullish scenario that we can still see all-time high in 2022.
Yeah. So I mean, for me, and I'll just flip back to the Bitcoin chart here, is for me, the bullish case would be if we start heading back and getting back to 65,000 for me. So, at this stage of the game, I'd even be impressed if you got above this middle line here. So if you got back north of, like, if you were able to break above even 52,000, then I would start to say, okay, price action is now in the upper 50% of the range. There's a possibility, but the end all be all is that all-time high at 68, 69,000. That would be where, okay, we're now entering a new bull cycle. And at that point, I got to think 100,000 is on the table very, very quickly. I mean, you'll have more adoption of it as soon as, and a lot of people act. In fact, I was on a different show the other day and they were saying, well, when do you think 65% of the US will be invested in Bitcoin? And the answer is not until the next bull cycle, really, at earliest. Because people, when its price is going down, that's when they don't want to get in, right? They're going to be shying away. Oh, it's too risky. It's when it makes new all-time highs that they start saying, oh, I got to get in right now type thing. So yeah, for me, I think, there's always a chance you're right, and you might be right. What's great about a market is that's what makes a market. You have to have bulls and bears. But yeah, it's hard for me to imagine how Bitcoin could break up significantly until you have the scenarios in place. For instance, the government regulating here in the US, everyone's talked about how scary that is. I think it's a necessity. Like, I've talked to a lot of senior citizens, older people, and they just don't want to go near Bitcoin with the volatility as wild as it is, and with the fact that it's so risky. I even had a scenario where someone jacked my SIM card and got into one of my crypto accounts. Now, luckily I hadn't funded that particular crypto account, but if I did, they could have gotten my crypto and there's nothing I could have done about it. No repercussions. There's no FDIC insurance like on a stock account where the government says we're going to guarantee that if someone steals your money, you will get it back. And so there has to be, if you want that mass adoption that can drive Bitcoin to 500,000, there has to be more good quality regulation on these things.
Do you feel that regulation should maybe not be on the layer 1, on the base layer, but maybe be on the second or the third layer, so that the crypto in essence can still, remain decentralized? Because as soon as they want to be able to regulate something, they want to be able to control it, and they want to be able to put it in a box like they do with the legacy markets. So what would your thoughts be around that then?
Yeah, I mean, that's a great question about where should the regulation ultimately go. I think decentralized is obviously what you want. I think people want that to feel more secure, but it's hard for me to know exactly what's going to be the most beneficial. The question is is that you want the average person to feel comfortable buying and investing in crypto for it to really have that longevity, right? And that high price spike. And so the question is, where's the regulation going to fall that's going to give people that confidence? So I'm not honestly going to pretend I know the answer to that, but I do think that at some point you need this FDIC insurance, which is what we have here in the US, where they guarantee that if you get, robbed, essentially, you'll get your money back. And I think you also have to see more, you want to see more price stability, right? So like I look at pension funds, and I talked about this before, is if pension funds, which are retirement, trillions of dollars that have retirement funds in it for people, if they just put 3 or 5% of their money invested in Bitcoin would instantaneously be 250,000 a coin, if not more.
That's it.
And so you need to get to that point where these bigger entities feel okay investing and saying, okay, this is a legitimate asset. We need exposure to get a well-rounded portfolio. Now we feel confident enough to do it.
Actually, I read up the world economy consists of $300 trillion, if I'm not mistaken. And if 5% of that finds its way into Bitcoin, just 5%, and realistically, not all of it can go to Bitcoin because there's gold, there's property, and. But if just 5% finds its way, you're sitting at a $2 million Bitcoin price,
right?
Market cap, simple calculation.
Yeah, isn't that amazing?
So it makes for an interesting long-term outlook.
Yeah, there's so much potential upside. It is remarkable to me. And that's why in the longer term, I really want to be invested, because I do believe that people want. I'm an investor in gold. In fact, right now I'm a big fan of gold. But at the same time, I think down the line, my diversified portfolio will absolutely have Bitcoin in it as well, and decently large stakes in Bitcoin. I'm not one that ever thinks the Fed is going to get out of the mess that they've built, the Federal Reserve, nor central banks globally, because the economy just gets smoked every time they raise rates, and then they have to go back to printing money to get us out of it. So that's ultimately a very long-term bullish scenario for Bitcoin and cryptocurrencies.
What is your feeling on that now, while we're on that topic? What would be the bigger evil that they would try and prevent? Inflation or unemployment? Because that's the kind of two target points, and we're coming in 2022 is an election year for them, so they want this to be a good year. So I almost don't want to answer the question I'm asking, but it kind of points to the fact that they're not going to want to push up the rates because they want the economy to keep on booming.
Yeah, so I think right now it's kind of a which is the worst case right now. So, or which is the greater evil, if you will. And so right now you have unemployment here in the US. I think it's like 4.9%, very, very low historically. And you have inflation that's at 8% or 7%. And so right now the goal is, okay, well, with unemployment down here and inflation up here, we definitely want to focus on inflation. But what's going to end up happening is inflation will come down a little bit, and then they're going to slow the economy, and you're going to see unemployment rise. And then as soon as that happens, where unemployment gets to like 7-8%, now this is the greater evil, and they're going to have to start that. They're going to say, okay, well, inflation's at 5%. We can deal with it at 6%. So let's print money to bring down here. And it's going to be like, you're basically going to be in a scenario where it's whack-a-mole, one way, one back and forth the other. So right now, obviously inflation's the scary part, but I think within 6 to 12 months, the economy is going to slow from what the Fed is doing, and they're going to have to start printing money again. And my guess is that might in fact be the low on Bitcoin. Not that Bitcoin will start to shoot right back up, but don't be surprised if in like September, October, November, December of this year, if we do see the economy to weaken dramatically, the Fed starts printing, and maybe that's where Bitcoin bottoms out for the longer term.
It kind of supports the narrative on the Dixie that normally if we go and back check it and correlate it with Bitcoin bull runs or strong rallies, it's normally when the DXY goes down and Bitcoin goes up. And at the moment we're in a lateral pattern, currently hovering, and Wyckoff wise it is pointing to a distribution forming, and that might be the setup for the distribution, and that's currently the play that I'm working with on my analysis of where I see things big picture. But yes, let's hear a little bit more charts. I want to see what you want to share with us.
Yeah, so I just wanted to show this chart because I've been talking about how the crypto space is very similar to the .coms back in 99, 2000. So this is a chart of Bitcoin, right? This is the weekly chart. And what I'm going to do is flip over to Amazon, right? And Amazon's probably the most well-known. And what I want to show you on Amazon here, look at this. Let me go to the weekly. Bear with me as I bring it into scope here. All right, so you guys see that? It's almost identical. You have the same sort of pattern in 99 to 2000 on Amazon that you have on Bitcoin. And what's scary about that is that ultimately Amazon went from over $100 and didn't bottom out until it got to about $5. So again, you never know for sure. But my job is to look at as many different points and see what they're saying. And this is something that, again, if you look back at what was going on, the mentality in the late 90s with the .coms, with the internet as a new technology, and then here you have Amazon, which arguably is the biggest one, right? Here it is with that same sort of pattern. And then you flip to Bitcoin and you got the same sort of M-top pattern. The only problem is Bitcoin, if it follows Amazon, is headed down here, right? So again, not to say that this is definitely going to happen, but it's you can't help but notice how Bitcoin would be like the Amazon of today's day and age, right? And then here you had Amazon. What did Amazon do back when the .com bubble burst? And it's not pretty.
We actually correlate a lot of our.
It is pretty. I mean, that price of BTC is wow.
Well, and on the positive side, I want to stress this too: is like if Bitcoin does go down to 20 or 15 or 10, if you still have the same thesis that I do, you're going to get one of the most amazing buying opportunities of your career. Same thing as in Amazon. I mean, I wish going back on Amazon, I bought it when it was $5. I mean, think about the return. Now with it trading, at 3,000 or, as high as 4,000 not too long ago. So the idea is in bear markets, there's actually great opportunities. And I think that's important for investors to remember. It might stink and suck for the time being, but ultimately, if you're smart about it and you don't let emotion freak you out, which keeps you from buying it at the right levels, you can end up making amazing opportunities that can be life-changing investments.
That is true. We actually, and I love the way that would basically almost be your third level of confluence, stating why you think that it's going to go down. So just to rewind back for the viewers, the first one is the premise on the head and shoulders. The first one was Bitcoin normally after a bull run does an 85% correction.
Yeah,
and we can actually check that as well. And an easy way, if you do the 55 EMA on a 3-day, it also goes and tags the 55 EMA on a 3-day, and that normally signals that that is over. So I've not checked it recently. And then your second level of confluence would then be the head and shoulders, and how these patterns statistically play out. And that's the big thing statistically. And then thirdly, what you just mentioned now, looking at fractals back in past, that gives you an idea. So for everybody that's watching, and the reality is there is method behind the madness when when there's crazy targets like this, and I really love it. So well done.
And I would even,
on that?
And just like you're saying too, even another one as well would be that psychological indicator where, you know, you saw max greed at 68, 69,000. And, you know, you look at where we are when we hit 33,000, there was a little bit of fear out there. I mean, I could definitely feel like people saying, oh my goodness, what's going on here? But it wasn't the blood in the streets that you refer to when you're saying a total washout, right? So what that tells you, it doesn't tell you you're going down to 20,000. It tells you that you likely haven't made a low yet in the cycle, at least.
That is one thing that I want to, if I can share with you after you finished, is as a probable fractal scenario that we're looking at that points us to why there's still probable upside in the bull cycle. If we've got time, I think that's the big thing. If we get time, I don't want to be keeping our viewers up with stuff that they already seen, but I would love to show you that. But please continue. Let's keep on track with what we're looking at.
Well, I think, I mean, for the charts, I mean, that's basically on Bitcoin what I'm looking at. So, you know, and one other thing I'd like to mention is that, please, for those of you watching, this doesn't mean that I'm going to just sit and say, okay, well, if Bitcoin doesn't get below 20,000, I am not buying one single Bitcoin. I'm a big believer in dollar cost averaging, right? So you just need a plan. So have a plan, right? Let's say you make $5,000 a month. You say, okay, $500 every month will go into Bitcoin. Stick with it, because ultimately we don't know if it will really go down there. And I'm very confident that you're going to 100,000, 500. Maybe it takes years, but I do think there's upside. So for me, probably once it gets below 30, I might say, okay, I'm going to commit, you know, $25,000 at maybe 28,000, maybe another 25 at 24,000, another 25 at 20,000. Then if we get below 20, maybe I'll up it to 50,000 a month, you know, or something like that, or at a price target. And the idea is that, you know, at a certain point, I do want to have some skin in the game just in case it doesn't get down. Because I'm a day trader too, and I've been in plenty of scenarios where I put out my order at like $19.95 to buy a stock, for instance, and it goes to $19.96, and I don't get filled, and then it jumps up, and I'm like, oh darn it, I didn't, you know, I missed the trade. So don't necessarily rely on me or anyone else to tell you. If you like Bitcoin in the long term, do the smart thing and just buy a little bit every couple months or something. And then your dollar cost average will be low enough if it goes that low, where when it goes up, you'll make a lot of money.
Or simply follow Gareth and follow EMC.
Yeah.
No, just follow Gareth. Just follow us on Twitter. We will tell you what to do on a daily basis.
That puts a lot of pressure on me, man.
Let's talk about trading. I mean, I just want to ask you a few questions about trading. Are you a swing trader, position trader, or more like you said you are a day trader too? What kind of trader are you?
Yeah, I'm a day trader and a swing trader, and I love the combination, because I've had periods where as a day trader, there's nothing to do all day. And I'm the type of day trader where I'm so disciplined that some days I'll sit there and do nothing. There's not a trade. The markets are trading sideways. And that's important to prove to yourself that you're disciplined enough to not trade. Because everyone, when they start, and this is me when I first started, I had to be in a trade every single second. If I wasn't in a trade, I was searching so hard and like forcing trades, right? Instead of letting the trades come to you. I've been a big proponent of saying that when a trade is there, it almost jumps off the page at you and smacks you in the face. Like it should be so obvious that you can't deny it, right? It's right there in front of you. So I'm a day trader, and I also am a swing trader. Swing trades can be great. Recently, the technology stocks got crushed. Over the last week, we bought a lot of tech stocks, and they bounced back tremendously. I was taking 10 to 20% gains on those stocks in just maybe a week's time. So it was a pretty nice move. So I'm really a day trader and a swing trader. And again, it's really mostly technical based versus there's really not much fundamental analysis there.
Yeah, let's talk about day trade then. On what time frame are you? What time frame are you using to execute a trade, and what are the condition or chart that you'd like to see before you enter the trade?
Yeah, so for day trading, I usually use the 10 or the 15-minute chart. Why I like those charts is because it's not such a big time frame that you miss smaller moves. But if you use the 1 minute, like there's some traders that use the 1 minute, and for me, the 1 minute looks like a bunch of just chop. It's like, and I can't read anything on that. It just looks like a bunch of jumbled, ups and downs. So I like seeing the bigger patterns. You mentioned price, pattern, and time. So those are the criteria that I look for in charts. So price would be like a gap fill, a double bottom, a technical trend line support level. A pattern would be like a bull flag or a bear flag. And then the time factor is the most unique, where we've discovered that when you have things in terms of seven's the most common, where when you get, let's say you get 7 red candles in a row, the odds strongly favor that you're going to get a bounce either on 7 or 8. And if you see, like, for instance, if you had a bull flag of 7 sideways candles, the odds of you getting a breakout on that 8th candle are extremely high. So there's a combining of these different things that is just remarkable.
We've got here the 7 correction swing pattern.
Yeah. And I mean, what's amazing about it is, and this kind of gets a little crazy out there, but if you read religious texts, if you read almost, I mean, there's 7s come up in so many things. There must be something internal in the human body with 7s, and you could probably come up with a bunch of different things, but there's something about 7s that make it very, very powerful.
That truly is. 7 is a powerful count, and that's the thing about what people also don't forget, and I think that's a stress point when you do see those 7. Nothing lasts forever, and I think that also around 7 is when people tend to get overconfident, and you can go and count them. I also look at 5s sometimes, but we found that 7 is the better lucky number there.
Yeah, so and I'll just show this real quick. So check this out, guys. This is kind of cool. So here was Bitcoin earlier today, right? And here was your first big down candle of your breakdown. So 1, 2, 3, 4, 5, 6, 7. And look, on the 8th candle, you started to move up. So, again, I just happen to see this right now, but it's just kind of cool to see. So as a technical basis, you'd want something as a secondary factor. I mean, looking at the charts, you could see a little bit of support right here as well. But again, having that that 7 down kind of move in a row into technical support. And then what does Bitcoin do? It moves beautifully up.
Interesting.
That's interesting.
Amazing.
Do you price action trade, or do you like to use indicators as well? Because I see a beautiful clean chart. That's how I like to look at the charts. Or do you dabble in a little bit of a stochastic and a little bit of an RSI to the side?
I actually don't use. I have the moving averages on my chart usually, but aside from that, I don't use anything else. And I really have found that if you have too many indicators on your chart, inevitably something's going to tell you the opposite. And then you're going to start kind of being like, well, do I do it? Do I not do it? I really like to keep the charts, like you said, just so clean. I really believe that everything you need to know is in the chart here for Bitcoin. Like, again, just going back to this line, I mean, this was very clear that when you broke this right here, this was on an obvious support. I mean, this was going to take you down. And let me just see. I'd love to I can just zoom out on some of these charts and just see what else we have here. All right, so check this out, right? So and again, I'm eyeballing, but take this pivot low right here, connect it to these pivot lows right here, or that pivot low, and look, pivot, perfectly lining up. So that gives you another reason why Bitcoin had a good chance. And again, it's probabilities, right? You don't know for sure, but it gives you the good probability that you were going to get a bounce on Bitcoin. So as a day trader, you can use these on the daily chart as a swing trader and all that stuff. And again, same thing with the upside. I mean, it's very clear why Bitcoin has stalled at 39,000 just on this chart as well. You had the pivot back here at 39. You tested it here. You tested it here. You tested it here. It couldn't break. And then it collapses back down to support. So now you have kind of a little bit of a range on Bitcoin between here.
Interesting, really interesting. One last little pro tip that you can give to everybody watching. I think off the top of your head, I want to throw you under the bus for one last time. So
I would say, if I could go back and do it again, there's a few things that I would do differently. And I'd be a lot richer if I could go back and do it again, for sure, knowing what I know now. I would say that, number one, go into a trade thinking you might be wrong. right? And that sounds kind of weird, right? But in reality, most investors invest, and they invest heavily because they see something and they're like, oh, it's going to go up, so I should just throw all my money in this trade and I'll make a lot of money. In reality, the markets don't work that way. In fact, most of the trades I enter, if I buy it, usually goes a little lower first, right? Especially on the swing trade basis. So what I like to do is I like to say, okay, I'm going to commit $100,000 to this trade, and then I divide it up into segments. So I'll divide it up into fourths, let's say. So 25, 25, 25, 25. And I'll start with 25 at my first level. And then at the next level, I'll add another 25 and so forth. And what that does is it's increased my win rate exponentially, because it basically keeps my dollar cost average low enough where inevitably the levels, you're going to get a bounce. You might not bounce at the first level. Levels can break. But at the second or third or fourth, the probabilities, if they're 70% every single time, the probability is eventually you're going to get that bounce. And then you get in the money very, very quickly because your average is a lot lower. So go in humble. Always remember the markets are in charge. All we can do is trade the levels. Understand that you can be wrong.
Okay, that would be the best advice for a new trader, guys. Listen to the legend here. Let us know if you like the episode tonight. I had a lot of fun. I think the chart artist just left us because of load shedding. We have load shedding in South Africa, Gareth.
Gotcha.
It's when the electricity is gone, and you have to start the generator. To close it off, thank you very much again for your time, Gareth. And tell us where can we find you? Tell us, the audience, where we can find you.
Best place, Twitter. At Gareth Soloway, you see my name there. At Gareth Soloway is a great place to follow me for free. I post a chart here and there every day. And then if you're interested in my crypto trades, I have a swing trade service called verifiedinvestingcrypto.com, where I do a daily video with hardcore technical analysis. And I put out every trade I take in crypto. I put out for everyone to see. When I sell, I put it out as well. And you can follow me there as well. So, and thank you so much for having me on. I love talking charts. I love helping people to understand, and maybe improve a little bit. So thank you so much.
Oh, all the pleasure is mine. I'm sure you know. And yeah, thank you for coming. I hope to see you another time.
Yes, please have me back. Just let me know. I would love to be back.
Thank you, guys. Voila. I think that's it for tonight. I had a lot of joy and a lot of fun talking to Gareth. Again, it was an amazing show, amazing episode, and I wish to talk to you really soon. Thank you for being with us.
Feel free to reach out, in a month or a couple months or whenever you want, and it'd be wonderful to come on and see what Bitcoin's doing at that point.
Once we break 55, I'll give you a call.
All right, sounds good. Put me on the spot, huh?
Yeah. No, yeah.
Nice.
Okay.
All right, buddy. Have a great one. Thank you guys again for having me.
Have a nice day. Bye, guys. Bye.